This is Big Country Lifestyles with Robbie Johnson of Keller Williams Realty. This show is about you, your lifestyle, your home, and our community. This is the show where we explore our area to help you find the perfect home. It's also a place where we help you sell your home. Whatever your preferred lifestyle is, Johnson Property Group wants to help you find the perfect property. Thank you for tuning in to Big Country Lifestyles. Well, hello, Big Country, and welcome to our weekly radio show. Today in the studio, as always, is our awesome producer, Chaz, and my Texas team, Johnson Property Group, Alex Finn, Joe Potosnik, and Gina Ullman, and I'm your host, Robbie Johnson, team leader for Johnson Property Group at Keller Williams Realty. Also in the studio is my friend, Mark Perkins, with Perkins Insurance Agency. So we promised you last week that we would bring in someone who was an insurance provider so that we could talk about the grow houses. So we didn't just bring in anybody, we brought in the best, and we were just listening to him test his voice on the radio, and it sounds awesome. So I can't wait for y'all to get to hear him talk about all the different topics that we have today, which is going to be flood insurance, pitfalls of leases before ownership when buying or selling a property, and what is going to happen to property insurance if Texas passes legislation to legalize marijuana. So we've got some interesting topics for you today, and I think you're going to see through our discussion that hiring the right team is your best option when buying or selling real estate. So for any help with recommendations for your property insurance or buying or selling a home, please contact Johnson Property Group at 325-428-9114. Again, that number is 325-428-9114. So let's just jump right in with Mark and get to this. Our first topic is we are going to talk about what happens when you're buying a home and how you're going to go about getting your property insurance. So Mark, scenario is I'm helping a first-time home buyer and they want me to call you and get an insurance quote. What are your thoughts on this? Do you want me calling you to get the insurance quote? Do you want the lender calling you to get the insurance quote? Who do you want to talk to, Mark?
Well, you would think that the people, the buyers that are buying the house would take an interest in getting the insurance quote themselves, because obviously they're investing a lot of money to buy that house.
Agreed.
And so we would prefer that they would contact us. If you want you as a realtor or a lender, whomever that might be, we would prefer that you just refer that buyer to us as the agent.
Okay, so I'm going to refer the buyer to you. What do they need to be prepared whenever they call you? What do we need as realtors to provide to them, or what do they need to have ready to be able to talk to you?
And there's so many more tools than we used to have in the insurance industry than just a few years ago that helps us as agents gather the data and have that ready and available to us. So it's really minimal. When they call, we know who their name and maybe where they live. They're going to know that, their prior address. They're going to know their social, their date of birth. Those are all things we're going to need to get. And then really the address of the house they're buying. If they know the characteristics of the house, which hopefully they do because they're buying the house, right? Like the number of bedrooms, the baths, the type of roof that it has. Does it have 2-car garage, 3-car garage?
Which technically you could call us and ask us.
Absolutely.
We could find those things as well.
And really even, we will ask that, but even really with Trulia and other things like that out there, or your website, I should say, that will show those information, have those photos of the house that they're purchasing up. Yeah, it's really easy for us to go get that information, even really with just an address. So really just basic information. What is their name? Maybe their prior address. We may need that. What is their social, their date of birth? And then the address of the house they're buying. Pretty much after that, we can get enough information that we can generally give them a quote. So it doesn't take a whole lot of information from them as a buyer to bring to the table for us to get started.
So when are you, it's my understanding that y'all pull credit. So when are you pulling their credit? Are you doing this during that initial phone conversation when you're getting their social security number to see how much it's going to cost them?
So the credit issue, that's a great question and a great point. I'm glad you brought that up. Credit is one rating factor in of several that we use and that insurance companies use to determine rates. So we're asking for their social. We as agents do not see what their score is. In fact, the insurance company doesn't even really see what their score is. So the insurance company is doing all that behind the scenes in their own rating system. Whatever they pull, we don't even know what they pull as agents. So It's just a number we have to get an accurate quote. And it goes along with the year built, the square footage. Is it in town? Is it out of town? And has it had any claims on the house? Those sort of things. All that information together goes into whatever the geniuses behind the scenes put together in the rating systems for the companies and helps determine the rate. So yes, it is a factor. It is something we need. We do need that Social Security number to really get them an accurate rate. We do need that up front.
Okay, so just kind of thinking about some of our different types of buyers that we have. You've got, I'm just going to use me. At one time, I'm a single mom and had some hard times, in our formal financial situation with my ex-husband. And so, is all of that going to show up? Are they going to say, no, we're not going to insure the house because, you missed one payment on a boat 5 years ago? I mean, are they looking at those kind of things too?
I don't know that it gets that specific.
Okay.
So the answer to that is generally no. You're not going to be uninsurable. Could a lower credit score affect your rates? Yes.
Okay, so it's going to come in what they're getting quoted, not, I don't want to get someone into a situation where we're 2 weeks before the closing and they can't get insurance because of something maybe on their past credit history. So they're going to get insurance. It just might not be at the desirable price point that they want.
They may think it's too high.
Yeah,
maybe.
exactly.
But no, they're going to be insurable. And we've seen certain companies very rarely, and I won't name them because it's very rare that this happens, but maybe somebody's credit score is really low, and so they do say that they're ineligible for coverage. But there's some other things behind that, even in addition to that, that's causing that to be the case.
Okay.
And so that can happen rarely, but that may knock that one company out, but it doesn't necessarily knock the whole market out. So we're gonna have a rate. And first of all, I guess I should back up a little bit and say we're independent agents. We're not aligned with just one particular company. We act like a broker. Yes, like a broker.
Yes.
Yeah, State Farm, Allstate, whatever. We are an independent agent, and so we represent a number of different carriers, and so we have the advantage that those direct writers don't, and that we can shop the market. We're really there for you to shop the market and see what's available. Much like a real estate broker says, okay, tell me what you're looking for. Let me go find you the house, the desirable place, the district, whatever. We're that same way, just like you guys. We're going to go help you and your client find what's best for them.
Well, and I think it kind of goes back to what I've talked to you about before, is that option period that we get in the state of Texas. Not every state gets that type of inspection period where for any reason they can cancel the contract. It's so important during that option period that they are calling you and seeing if they can afford the insurance before we get on down the road.
Right. You brought that up to me when we were kind of rehearsing for the show and talking about the topics we're going to talk about. And I hadn't thought of that. On the insurance side, we're just thinking insurance. We're not thinking the real estate side. But now, that absolutely came into my mind and thought, hey, that's a really good point. It might make it down the road where the lender would say the property is not going to pass underwriting because it's not insurable. They can't. It's going to put them into a debt to income ratio that now they can't afford to buy this house. I just don't want to get a buyer. I care about my buyers. I don't want to get my buyer down the road where they feel like they're packing and moving in their mind. Right.
And now they can't buy this house.
Right. And we were talking about that, and I agree with you. You don't want to hinder someone that where they have a problem. They can't close. So I'm totally on board with you after talking about that with you, that should happen. The insurance part of it should happen early on in the process. That 10-day option period is a great time. And typically turnaround time for us in a closing like that, when we know there's a time deadline there, our staff is clued in on that. And we can turn something around in 24 hours. And the reason it takes us a little longer is because we're shopping a number of markets. We're not plugging it in one rating system and saying, okay, here's our rate. We're looking at 10 to 12 possibly.
So, Mark, when you pull the credit report, does that affect the buyer's credit score?
There are varying opinions on that. Everything in the insurance industry says no. It does not. And it's just a look. It's not like I'm going to the bank and I'm trying to qualify for the house, or I'm trying to qualify for a car, and so I'm opening that sort of a look. It's just a snapshot to see what your number is. And so everything that we're told says no, it does not.
That's excellent, because I know a lot of buyers start panicking a little bit when they hear their credit's going to be pulled. So that's excellent.
When that first started coming into play for us in the industry, it really was an issue. There were really people that didn't want to give us their Social Security number because they would ask, well, are you going to pull my credit? Well, yes, the company does look at that. And really, there's empirical data now over the last several years, and Progressive was one of the companies that really started driving the use of credit. But the data really shows that there is a correlation between the potential for claims with lower credit scores and the potential for less claims with those individuals that have higher credit scores. Wow. And so we try to counsel our individuals, that is part of that's why they look at it. It doesn't mean you're going to have a claim or you're going to turn one in, but the statistics bear out that if your credit's lower, you're more likely to have a claim.
I see.
Okay, so tell me a little bit about, just so that our listeners can understand, what is a clue report? Tell us kind of what that is and what happens with that.
So the clue report is an underwriting report that most of your standard carriers, and when I say standard carriers, you're talking about your State Farm, your Allstate, your Travelers, your Safeco, Liberty Mutual, Geico, these kinds of companies, that they report to a centralized bureau for claims that are paid for individuals like you, Robbie, and then even maybe for location addresses, like specific to a certain address. And that's how the companies can track and say, we know that Robbie got paid X amount of dollars for this type of claim at this address. And on that report, it'll show the amount paid. And so
it shows if it's open, doesn't it?
It does show if it's open. Yeah, that's what I was about to say. It does show. We see a C or an O next to that dollar amount paid, and so we know the C is obviously for closed. And if it still shows O, it's an open claim. It's not totally resolved. There's something hanging out there. Either the repairs haven't been made, or final payment hasn't necessarily been paid out by the company.
This is like the credit report for a house.
Yes.
I mean, it's kind of like the same thing as we as humans, our credit reports, our credit scores. Yep. It's kind of like the house credit score.
So generally those open topics start questions then at that point, right? Explanations as to why they're still open. And the seller would then need to explain.
Yeah, that's when underwriting gets involved, and they want to know what's going on with that claim. And so if we have an open claim on a house that's being bought, we may see some questions on that.
Okay, everyone. Well, stay with us. Our next topic is one I know that you're going to want to hear about because everybody all over the country talks about flood insurance. We'll be right back after this quick break. And just remember, if you're thinking about relocating within the Abilene area or relocating to the big country, we have the perfect team in place, all who have made that move at some point in our life. We understand what your needs are. And please give us a call today at 325-428-9114. Again, that's 325-428-9114. And we will be right back.
Some huge news with Robbie Johnson with Keller Williams Realty. Joe Potosnik, one of the area's top realtors of 23 years and who's helped over 400 families buy or sell, has joined the team. Joe affiliated with the team that he feels best represents his work ethic and integrity. When you are ready to buy or sell, choose your preferred real estate lifestyle specialist. Call Robbie at 325-428-9114 so you can work with Joe too. Again, that number is 325-428-9114.
Thank you for staying with us. With me today discussing all these great topics is Mark Perkins from Perkins Insurance Agency, then my team, Johnson Property Group at Keller Williams Realty. This includes Robbie Johnson, Joe Potosnak, Gina Ullman, and I'm Alex Finn. If you want to learn more about choosing experience for your real estate needs, then please make the choice to call us at 325-428-9114. Also, visit us on Facebook at Johnson Property Group or Big Country Lifestyles Radio Show. Leave us comments or questions or anything you'd like to see on the show. Again, you can reach us by voice or text message at 325-428-9114. We want to be interviewed for the job to become your realtor of choice. We are the market experts. Again, that number is 325-428-9114.
Okay, so flood insurance. I think that's just a topic that kind of scares everybody. And, many of our first-time home buyers are even told sometimes not to even buy a house that requires flood insurance. So, Mark, you're here today to kind of give us the lowdown, give us your feelings on flood insurance. I'm sure we're going to have several questions about it. But if you can kind of start with just what is the dynamics of flood insurance? What is it that scares everybody? Tell us a little bit about it.
Well, I think number one, it's obviously expense, right? I mean, they're looking at insurance already, and now we're adding a different level of insurance.
But it's not that much money.
It's not that much money.
But I guess to a first-time home buyer, it could be.
It's a shock, right?
Yeah.
It's like throwing them in the water and asking them to tread water, right? I mean,
okay.
So a few years ago, the FEMA, which is the federally backed flood program, started taking rates. And much like everything else in our government, do you think we run that program very efficiently? No, we don't, right?
So
now that program is really upside down. And so rates had to be adjusted accordingly. And so that started a shift in the flood market. And we've seen that in Abilene over the last 3 or 4 years. And so as rates began to rise, much like floodwaters, that changed who entered the flood market as far as carriers that will insure flood properties or flood properties that are at risk at flood.
So you're talking about the insurance companies or the underwriters who would offer it. Okay.
The FEMA program is it's federally mandated. You have to charge these rates. It's very stringent, just like anything that's federally run. And so the private market flood has come in over the last 3 or 4 years. And so when we're talking about private market flood, we're talking about flood carriers that aren't backed by the federal government and its stop-loss program for their losses that happen and occur through flood. And those markets, the private market flood, is actually Lloyd's of London. Well, if you know anything about insurance, you may have heard Lloyd's of London. Well, Lloyd's of London is the largest insurance broker / syndicate in the world. And so really for me, I feel better at this point as an agent recommending to my clients and people who are buying flood insurance, let's look at the private market flood and see how it compares to what the FEMA rates are. Number one, your rates, the actual cost of your insurance for the private market flood option versus the FEMA flood option is probably going to be less.
So buyers have an option?
Buyers absolutely have an option.
Both. They can either go the FEMA route or go the private. Okay.
And there are times that actually the FEMA route is better pricing or actually will insure it. And so the FEMA route, they have to take you. Regardless of where you are, if you're right in the middle of the flood zone, floodway, they will have a rate. And it may be sky high and you may pay a lot of money for it, but they will have a rate they have to take you. The private market flood is optional. They can underwrite it and say, well, we like where your house is, and so we'll offer you a rate, and here's what it is. Or they look at it on the map and say, no, it's too far into the flood zone or the floodway, so we're not going to insure that. We're just going to decline it. And so there are times that FEMA may be the only option still, but there may be times based on underwriting that FEMA is still competitive or still better than what the private markets will do. But the one cool thing I like about private markets is they allow a little more flexibility with the actual limit of insurance that you have to have. So let's say I'm closing, my mortgage company says I've got to have flood insurance. I'm in a floodway or a flood zone. I know that I have to have flood insurance. They're going to make me carry enough flood insurance to cover the loan amount that I'm borrowing from them. So if it's $180,000, I've got to have typically $180,000 in flood coverage. Okay, much like I'm insuring that house too on the property side. Now, if that house is outside of a flood zone, do I have to carry a certain amount? Well, maybe I don't because they're not requiring it. But if I wanted to buy it, I could. But the private market floods aren't requiring us, the markets aren't requiring us to really insure to a replacement cost $180,000 amount. So if I'm buying in a floodway, and maybe I'm an investor and I bought that house at a lower amount, I have more flexibility in the private market flood than I do with FEMA in what I want to insure to.
Okay, I have a question. So I dealt with FEMA insurance a lot and still do in selling in Destin, Florida. So tell me if this is true, because I had a buyer tell me that they didn't want to buy. It was a Gulf front home and very, very large home. So we're talking probably, if I'm remembering correctly, probably about $2.8 to $3 million. And so he was sharing with me that because it was after a hurricane, so our insurance rates had gone, through the roof. But he was saying for a home like that, we were talking about $20,000 a year.
For flood insurance.
For both property and flood. Yeah. Does that sound right?
Sounds right.
Okay,
Absolutely.
That's interesting.
Yes.
That's why I asked the question, can you choose FEMA or choose private?
It just depends on, there's so many characteristics and underwriting things that the companies look at. If it's in Florida and it's in Destin, obviously there's coastal exposure, right?
Right.
And we're talking a $2.8 million house. So the property insurance on that's probably not going to be very cheap. Of that $20,000, I bet that was the chunk of it. If there was flood insurance involved in that too, just depending on where he is, what his elevation is over the base flood elevation, who knows? I don't know what the premium for that would be, but it could definitely be that high. So Yeah, absolutely. Could it be possible? Maybe so. One thing I thought you were going to bring up there, you didn't go there. But with a $2.8 million house, talking about flood insurance, this may be partly why was so high.
But we have them here too.
Yeah, we do.
I mean, people, when I very first moved here, it was, you'll never sell houses like you do in Florida. I'm sorry. I don't agree with that at all. I think there's many homes that are well over 1 million in our area. They may not be as in multitude, but there's many, many, many homes like that in this area.
Yeah, and you're right. The last time I looked, we're still out here in the middle of oil.
Well,
and oil's doing pretty well, right?
Lots of money.
So there is some money out here.
That's right.
But yes, where I thought you were going with that is on those higher valued homes that can be in a flood zone. FEMA actually caps the amount of property insurance they will insure a property to at $250,000. And so sometimes the private market flood does give us greater flexibility with higher limits on those types of houses, on those higher valued homes. There's some more flexibility. They may do $500,000 or something like that, just based on the market we're using.
So let me ask you a question.
Okay.
Because you started this and you said that would require. So if we're showing a house on the side of Steamboat, I don't know of any that might be, well, there are some, but let's say we're showing a house on the side of Steamboat or somebody's building a house. There's the potential that they could have some running water coming off of Steamboat in a large home. So they would need, whether they're in a flood zone or not, that would constitute coming to you and looking at maybe something that would be in the private market, correct?
That's a perfect example, yes. And flood insurance for those type houses, even if they said if running water comes off the Steamboat Mountain or a mountain or whatever, a drainage area into my house, is that people, I think, generally think that's covered by my home insurance, and it's not. It's rain, it's rising water, running water, it's considered flood. And so flood insurance would come in at that point and pick that up. And when you're in an area like that's not really necessarily in a flood zone, the cost for insurance, even if it was just $50,000, it's typically $250 a year for something like that. So it's very minimal in cost for us to protect ourselves for that type of exposure.
So is there anything else you want to share with us in your thoughts with flood insurance?
Oh, absolutely. Don't be afraid of flood insurance. In fact, I would, if I can plug myself, give me a call.
Please plug yourself. Nobody else is going to plug you. Apparently, we've not done it. 325-673-9300. Again, 325-673-9300. And we'll be glad to walk you through any scenario you have with flood insurance. It's not that scary. And yet you'll be so glad you had it if that ever happens. Totally agree with you. So, okay, everybody, listeners, we're going to take a quick break. And up next is what sellers and buyers need to understand when they want to live in a house and they don't yet own it.
Transferring to Dyess Air Force Base or maybe Hurlburt Field or Eglin Air Force Base in Florida? If so, the real estate team to help you find the perfect home is Johnson Property Group Network. With team members in Abilene, Dallas, Birmingham, Alabama, Destin, Florida, and Fort Walton Beach, Florida, we are the perfect match to serve your relocation needs. Our team members are military relocation certified and, more importantly, boots on the ground experience with a combination of 73 years of selling real estate. If you want an agent with a complete understanding of the military moving, then call Johnson Property Group Network at Keller Williams Realty today at 325-428-9114.
Thank you, listeners, for staying with us. Today, we are discussing what sellers and buyers need to understand when they want to live in the house and they don't own it yet, otherwise known as a temporary lease. With me today is my team, the Johnson Property Group. This includes Robbie Johnson, Joe Pitosnak, Gina Ullman, and I am Alex Finn.
Okay, team, we're going to start talking about these buyer and seller temporary leases, and they just scare me to death. I know that in many situations they can be necessary, but I just feel like that it's setting the parties up for potential problems on down the road. And Gina, were you saying that you had a situation?
Yes, a couple of years ago when we bought a house, I really want to say it was our first house, so we really didn't know how, move-in went or what was allowed, but we needed to be in the house well before closing. We had come from California. We had 2 babies and nowhere to go. So we needed in, and thankfully the builder was gracious enough to let us do that. And we had all that taken care of, but immediately he was like, just do not do anything. Don't hang pictures.
Did he ask you to take care of your property insurance?
He just said,
who's insuring the house?
Yeah, he just said, just don't put anything on the wall in case something happens.
And this is exactly why we have Mark here today, is who is insuring the house? Is it in the insurance policy that the builder can let you move in? And I'm going to tell you, it happened with me right here in Abilene with a builder. I got a call that said, people are moving into the house. I didn't realize you closed today. And I went, what are you talking about? People are moving into the house. And I called the builder and said, can you please explain to me why somebody is moving into that house and I don't know about it? And they were just letting them move in. I'm like, whose insurance is covering this house? So Mark knows this is a topic that makes my fingernails go down a chalkboard. It just drives me insane. And so tell us your thoughts on this, Mark.
Man, this gives insurance agents heartburn too. So you're not in the boat by yourself by any means with that. So builders and sellers, let's kind of divide that out a minute. Builders, if they're smart enough, they have builder's risk policies that cover that property while it's being built. And sometimes those builder's risk policies will allow a permission to occupy. So that's actually a little
interesting.
different.
Okay, I did not know that. Glad to know that.
Yeah, and it generally anticipates a short-term occupancy.
Okay.
Not a 6 month, maybe 30 days or less. So
maybe 3 days before closing and they're moving their stuff.
So maybe that's okay.
Okay.
That doesn't scare me quite as bad as the seller side, where the seller has a homeowner's policy in place and the buyer moves in 30 days or rents it from them for 60 days or something like that. We've even seen that. Most of the time, generally in the insurance industry, there's not a good solution to that. The homeowner's policy says that the homeowner, the named insured, has to occupy the house for there to be coverage. So if I let you move into my house, all of a sudden it becomes tenant occupied, right? Because you don't own the house yet.
Exactly.
There's some argument about insurable interest in the house because you have a loan closing and all that sort of thing. But even then, it's occupied by a tenant at that point. It's not occupied by the named insured or an up and down family member, such as a son or daughter or mother or father, that sort of thing. Sometimes they can be covered. So yeah, it's very unnerving.
Mark, I would like to know, if it's not a new construction and it's an older home here in Abilene, can I get insurance if I'm going to lease the property beforehand and then have regular?
Oh, you're talking about something totally different. Okay, which I like. I like where you're going with that. He wants to
not be a new construction because we deal with that. Maybe it's a 1970s or 80s home.
Sure.
What can we do in the meantime?
Right. So the solution to that is, it depends on the carrier. I don't know what to say other than it depends on the carrier, because some carriers can make exceptions and understand, and they will make an exception to where the buyer's policy or the seller's policy actually will cover them for a few days. Generally, that is not the case, though. And so what you have to go to is some sort of tenant dwelling policy, like a landlord policy almost. And then the seller has that in place, and the buyer brings in their renter's quote-unquote policy. Like if I had a rent house and I have insuring my contents, that's what they would do to cover their contents and their personal liability.
Okay, so tell me this. The seller asks the buyer if they can remain in the house after the closing, and they sign a seller's temporary lease. So the landlord is the buyer or the new owner.
That's correct, yeah.
And the tenant is the old owner, the seller.
Right.
Insurance?
It's the same thing. It's just flip-flops at that point, right?
And your company can do this?
Well, we can. Yeah, absolutely.
Nice.
We have solutions for that.
But my issue with it is, okay, I just want to read this to y'all. It's very short. I mean, the temporary lease that we've got in Texas is basically 2 pages. It's very, very short, document. And this is how it addresses it. Insurance. Landlord and tenant shall each maintain such insurance on the contents and property as each party may deem appropriate during the term of this lease. Note, in all caps, consult your insurance agent. Possession of the property by buyer as tenant may change insurance policy coverage. But what proof does anybody have that they've even followed this? It isn't a problem until it's a problem.
That's right. And that's the unfortunate part is, if they're not really taking that part of it seriously, the all caps of that seriously, then yeah, they're going to find out at the end, after there is an issue, that there really is a bigger issue than the claim that they may have to try to file.
So the bottom line is, give us a call today at 325-428-9114. Let us visit with you about your buying needs or your home. We don't want you to make some mistakes that other buyers have made, and we don't want the sellers to have a realtor who just posts their home online and prays that it sells. We want to actually market your home. So give us a call, and thank you for tuning into our show. We are out of here, listeners, because we've got houses to sell.